Looking at the close of the US markets, and we saw the Dow finishing down yet again, down for the seventh straight day. Still pressure coming into the markets about the trade situation between the US and China, but also a fair bit of positioning going on in the markets as the FANG stocks, those large technology stocks, are doing well, and a real reversal of the losses over the last few months with money going back into that sector. The technology gains helping the NASDAQ eke out some good quality movements today, with the NASDAQ up around 56 points at the end of trade, while the Dow was down by 42 points. That NASDAQ yet again at a record high. The broader Russell 2000, the small cap index, also hitting record highs at the moment. So there's a fair bit of positioning going into new age technology stocks and also other areas of the market at present. We're still seeing a bit of pressure coming into some of those larger retail stocks. We had McDonald's losing a bit of ground today, and the worst performing stock on the Dow being Travelers, the large insurance company. If we have a look at Starbucks, its share price down around 9%. They came out and said that they would be closing more stores, especially in the US, and they're also seeing disappointing sales not only in the US but also in China at present. We had General Electric, with news came through from Dow Jones Index yesterday that they will be removed from the Dow Jones Industrial Average, being replaced by Walgreens Boots. We saw that GE shares came under pressure early in the session, but only down by 0.3% at the end of trade. We also had a fair bit of activity coming into the media space after Walt Disney came in with a new improved offer to buy the Fox 21st Century assets, and now willing to pay $71.3 billion in cash and stock for this company. That overshadows the other bid that came through in the markets from its rival Comcast only last week, and we saw that Fox's share price was up by 7.4% on this news. We did have existing home sales that were weaker than expected, and a continuation of growth coming through in the current account deficit as expected in the US, but not really impacting the markets too much. If we have a look at those commodity markets, a real switch going on in the gold price, down around $7 an ounce overnight to $1,271 an ounce, while the oil price continues to lift to $65.91 US a barrel. We do have the OPEC and non-OPEC meeting, which is ongoing, and the outcome should come through as of the 22nd of June to watch out for. So there's a fair bit of volatility in those oil and energy markets at present. If we look at the Aussie market, well, at the moment we're set for a 12-point gain. Looking back to yesterday, great growth coming through in the Australian market at the moment. High demand for investment, especially from overseas investors into our market because of stability in our economy, and also the fact we've got low interest rates and the Aussie dollar continuing to slide down nearly 4% in the last week, so creating a lot more enthusiasm and interest. We saw the Aussie market at a 10-year high yesterday. We're set for around a 12-point gain at the start of our trading day today, and that Australian dollar, it has moved a little bit stronger than where we were this time yesterday, but still holding around 73, 72 US cents.